Namaste, welcome to Arthaniti, where we discuss money and money matters to help you in your investing decisions. The debate surrounding small cap funds ceases to stop, where on one hand, experts are of the opinion that it is time you stop your small cap SIPs and focus your attention on large cap funds. There are other experts who are of the view that the longer you remain invested in any kind of mutual funds, the better you are to gain multifold returns. They are of the opinion that this is the time that will help you average out your purchase cost. So today, being a holiday in the market, I thought this as a golden opportunity to compare the top 4 small cap funds and see how they have fared in this market correction since September 2024. This idea was given to me by one of our viewers where he wanted to compare Nippon small cap fund with other funds in the category. Now, where S. Narain explicitly advised investors to stop SIPs in small and mid cap segments, now to quote from his speech, I will quote him verbatim. We think it is a clear time to take out lock, stock, and barrel from small and mid caps. He emphasized that this is not the time to invest in small and mid caps in SIPs, citing overvaluations as his primary concern. He warned investors that if you have started SIPs in this segment from 2023, you will have a very bad experience and negative returns going forward. He compared the current market situation with the 2008-2010 market fall and suggested that 2025 could be even more dangerous for investments. Now, on one hand, when he is so vehemently asking investors to stop their SIPs, there are contrarian views from other experts in the field. Radhika Gupta, the CEO of Edelweiss Mutual Fund, advocates maintaining SIPs for at least 10 years, where she says that they can weather out ups and downs in the market and help you gain windfall returns. She also emphasizes the long term benefits of having mid and small cap funds in your investment portfolio. Dhirendra Kumar of Value Research, in his analysis, shows that short term decline don't always result in long term losses. He also highlights the quick recovery potential of small and mid cap stocks after they have crashed in the market. So, for reviving your returns faster, you need such kind of stocks or such kind of investments in your portfolio. This is a contrary view from what S. Narain advocates. Despite the risks, small cap funds are crucial in your portfolio. Now, why am I saying this? Firstly, they have a higher growth potential than large cap funds. Secondly, they expose your investments to emerging sectors and innovative companies. Thirdly, they have a potential of outsized returns in the long run, and they help in portfolio diversification. So, part of your portfolio in small and mid caps is always advisable. What percentage? Normally, experts suggests not more than 20% of your portfolio to be in small and mid cap segments. What is a small cap fund? Now, as per SEBI guidelines, a small cap fund has to invest at least 65% of its assets in small cap companies. What are small cap companies? Well, considering the overall market value, companies ranking from 251 ahead fall in the small cap category. The remaining 35% of the assets of a small cap fund can be invested in other categories of equities like mid and large cap, debt, money market instruments, and so on. Now, let us focus our attention on studying some of the small cap funds. I have chosen 4 funds from the total of 29 funds available in the small cap category. The funds that we will be concentrating on today are Nippon small cap, Quant small cap, Kotak small cap, and Franklin India small cap funds. Let us start with Quant Small Cap Fund. Now, the fund AUM in January of 2024, last year, was at 8,102 crores. January 2025, the AUM stands at 25,183 crores. Now, that is a huge rise, correct? But if you compare the figures for the past 3 months, for Quant, where the January AUM stood at 25,000, the December AUM was at 26,700, and November AUM was at 27,200. So, there has been a gradual decline in the AUM since the market has fallen, correct? If you see the expense ratio of the fund is 0.57. 1 year return of the fund, I'll tell you the figures for 1 year return. The 1 year return has been severely hampered due to the market correction since September 2024. The 1 year return is in negative and stands at 8.09% on the negative side. If you see the 3 year returns for this fund, it is a good 23.21%. 5 year return stands at 40%, whereas 10-year returns over a period of 10 years, these are annualized figures, okay, the return is 19.09%. Next, coming to Kotak Small Cap Fund, the fund AUM was 12,700 crores in January of 2024, which increased to 16,450 crores in January 2025. For the last 3 months, the AUM has slightly reduced. It was 17,600 in November, 17,800 in December, and it went down to 16,450 in Jan 2024. The expense ratio is similar to Quant Mutual Fund, which is 0.57%. 1 year returns has been positive 3.05% for Kotak Small Cap Fund. So it has shown resilience in this market fall. 5 year returns has been 25%, and 10-year returns has been 17.56%. Next, we will look at Nippon Small Cap Fund. The AUM for Nippon in January of 2024 was at 35,524 crores, which surged to 57,000 crores in January 2025. But since November, there has been a gradual decline, as is the case with Quant. In November, the AUM figure was 61,000 crores, which increased a little to 61,600 in December, but has reduced by 3,000 crores in January 2025. Correct? The expense ratio of this fund is a little higher than Quant, which stands at 0.70%. If you see the 1 year return for Nippon Mutual Fund, the 1 year return is barely 0.84%, whereas the return for 5 years stands at 29.52, and 10-year returns are higher than Quant Mutual Fund, which stands at 20.5%. So these are comparative analysis for Nippon. Lastly, Franklin India Small Cap Fund. The AUM in January 2024 was at 11,766 crores, which increased to 12,862 crores in January 2025. In November 2024, the AUM was at 13,900, which increased to 14,100 in December and came down to 12,862 in January 2024. Expense ratio of the fund is on a slightly higher side and stands at 0.94%. 1 year return is a negative 1.98, so 2% negative returns in the last 1 year. For 5 years, the fund has generated a return of 25.09, and over a period of 10 years, it has generated a return of 15.78%. Let us dig deeper and go into the details of the portfolios of each of these funds to understand their investment philosophy and strategy. First, let us have a look at Quant Small Cap Fund. Now, despite being a small cap fund, it has significant exposure in large cap stocks like Reliance Industries, where it has invested nearly 10% of its assets. Geo Financials has an investment of 5%, Aegis Logistics 3.6%. Some other stocks in their portfolio: Tube Investment of India, Mazgaon Dock Shipyard, to name a few. Now, their investment strategy is a little distinctive from other mutual funds, where other mutual funds rely on fundamental analysis for their investment decisions. Quant mutual fund uses a data driven quantitative strategy for stock selection. What this helps it to do is it helps it to become more adaptive to market changes, which suggests a dynamic approach to management of their portfolio. Now, this is evident from the high turnover ratio that they have in their portfolio, which stands at a huge 178%. If we check the sectoral allocation of their funds, capital goods sector has the highest allocation of nearly 19%, followed by chemical sector with an allocation of 11%. Consumer durables has nearly 10%. Textiles another 9%. IT sector has nearly 8% of its allocation. Now, the Sharpe ratio for Quant mutual fund stands at 1.08. What is Sharpe ratio? Basically, it tells you the risk adjusted returns of a mutual fund. Higher the ratio, better are the returns as compared to the risk in the mutual fund. So, any ratio above 1% is said to be a good ratio, where for Quant mutual fund, the ratio stands at 1.08. Now, quant mutual fund should be suitable for investors who are comfortable with a data driven approach rather than a fundamental approach to investment, and who are ready to take bets and see frequent changes in their investment portfolio because of the adaptable approach to investing that quant mutual fund follows. So basically, too many things happening in the mutual funds as they are constantly changing their portfolio based on changes in the market conditions. Next, let us look at Kotak Small Cap Fund. Some of the key holdings in Kotak's portfolio: Century Plyboard, where it has invested 3%, nearly 3% of its assets; Blue Star, with an investment of nearly 2.78%; Amber Enterprises. Some other stocks in that portfolio are Timken India, Persistent Systems, Craftsman Automation. Now, when we look at the investment strategy and philosophy, it basically adheres to a bottoms up selection approach. So, it goes into the micro details of the company and then selects the stock. Focus is on quality and growth and identifying scalable businesses with strong moats and management. That is their philosophy of investing. If we look at sectoral allocation of Kotak mutual fund, capital goods has nearly 18.5% sectoral allocation, followed by consumer discretionary of nearly 15%, financials of 13.5, IT 9.9, so nearly 10%, healthcare of nearly 8.60. The Sharpe ratio stands at 0.91. Now, Kotak Small Cap Fund should be appropriate for investors who are seeking quality growth stocks with strong business models. Next, we will shift to Nippon Small Cap. Now, some of the key holdings in Nippon Small Cap, it has a holding in HDFC Bank, nearly 2% of its assets, then Multi Commodity Exchange, Tube Investments of India, Ramco Cements, KPIT, Birla Soft are some of its key holdings. The investment strategy that Nippon India follows is it identifies good growth businesses with reasonable size and valuations. Quality management, it emphasizes on potential mid caps of tomorrow, so small caps today which have the potential to grow into mid caps, and prudent risk management through diversification. If we look at sectoral allocation, again capital goods has nearly 16% of its allocation, chemicals nearly 8, automobile 9%, consumer discretionary 8.5, and IT 8%. Its Sharpe ratio is 0.98. It is suitable for investors looking for a balance of growth potential and risk management in small cap sector. Lastly, Franklin India Small Companies Fund. Some of the key holdings it has is in Brigade Enterprises, Aster DM Healthcare, Zensar Technologies, Grindwell Norton, Sonata Software, Carborundum Universal are some of its key holdings. If we look at the strategy that Franklin follows, it focuses on companies with long term growth potential, identifying undervalued companies with strong fundamentals. Coming to sectoral allocation, Franklin has nearly 23% allocation in the industrial sector, nearly 18% in consumer discretionary, 14.5 in financials, 13.5 in materials, and nearly 11.5% in IT sector. The Sharp ratio stands at 0.85. Now, people who are who want to invest in Franklin India small cap funds, this should be ideal for value investors looking for long term growth potential. Some of the key observations from all the analysis and comparison that we have done, like all funds have shown a significant AUM growth despite market volatility. We compared Jan 2024 AUM with January 2025 AUM, and all funds have shown growth in their assets under management. Nippon India small cap fund has the largest AUM, standing at 57,000 crore rupees, and it has the highest 1 year return. Quant small cap fund shows highest returns in 1 to 5 year period. Now, each fund has a distinctive investment philosophy and strategy. What suits your risk palette is for you to decide. Recent market corrections have significantly impacted their returns as well as AUM growth. Now, to summarize all the talk that happened till now, a few pointers. Firstly, always have a long term perspective of at least 7 to 10 years when you are investing in a small cap segment. Secondly, align your risk tolerance with the fund's investment philosophy. That is why it is very crucial that you study the fund and the investment strategy and philosophy the management uses to pick stocks. What is the growth prospect of that stock in a long run is also very essential to understand. Thirdly, diversification is absolutely necessary. Remember, investments in mid and small cap segments are volatile and risky, so how much percentage of your portfolio you allocate in this sector is very crucial. As I've already said, experts recommend an allocation of not more than 15 to 20% in the small and mid cap sector. Uh, Use SIPs to benefit from rupee cost averaging, especially when the markets are volatile as they currently are. And lastly, it is very important that you regularly review the fund's portfolio and rebalance your portfolio as in how the market changes. To conclude, remember small cap funds offer excellent growth potential, but they come with their share of risk and volatility. So, it is always advisable to consult a financial expert before taking decisions of investing in such kinds of investments. I hope this investment has added value and brought some clarity about the continued debate about investments in small cap funds. If you have liked this video, please like, share, and subscribe to my channel for more such informative content about investments. Uh, uh, until next time, stay safe. Goodbye.